All right, good morning, everyone. It's Monday, 6:30 a.m., May 25th. Price of Bitcoin currently at 87.12. So today what we're going to do is we're going to discuss where Bitcoin's price is, what our positioning is in the market, my short bias. I'm also going to discuss a key indicator that I've been watching for a little while. It's called the Bitcoin production cost indicator, and it's done by Eric Capriel, I think. One of the reasons why we're going to discuss this indicator is because it helps us understand exactly what is happening in the miner world, in that are they actually profitable? If they're not profitable, how much losses are they incurring? What exactly is a break-even price or the cost of production? And how that is going to impact Bitcoin's price. And then also, aside from that, we're going to discuss the technicals on a smaller time frame as well as a larger time frame. So let's get to it, okay? Again, if you're not familiar with the Alpha Trades community, we trade crypto, Forex, equities, and commodities. So come join the Advantage membership. There's a Discord link below. There's also a link to join our Advantage membership on our website below in the YouTube description. Let's get to it. All right, so first things first, one thing that I want to point out is this head and shoulders pattern that I saw developing. And I think this was pretty much in play only just around yesterday, I think around, was it midnight and after, when this right shoulder started developing on the way down. So once we started having that drop from $9,300 on the way down, I think this then kind of confirmed the head and shoulders pattern. You could see it on the volume itself, like I've stated. Typically, you have higher volume on the left shoulder, a slight, higher high, or technically a higher high in any case, on the head, but with lesser volume, as you can see. So higher volume, left shoulder, lesser volume down here, head right there, okay? And then the final step to the head and shoulders pattern is the right shoulder should be broken to the downside with volume increasing and candle spread going down, okay? We have yet to see that, but again, we just confirmed the break of this bigger triangle pattern, and I would not be surprised if going into today or maybe even early tomorrow, we see this break to the neckline. If we don't see that, there's a higher chance that maybe we climb back somewhere up here, maybe retest this trend line as resistance and then start breaking down. We're already pretty far away from what I would consider this area right here, or I'm sorry, this area right here, which is the point of breakdown. So I don't see any reason why we should climb anywhere up there. I'd probably figure if we're going to have maybe a mean reversion movement, it's probably just a little bit higher up here and then start moving down. But personally, in either case, I think there's a higher probability that we start moving down from here than we do start pressing up. Couple of reasons why I've explained is that if this was the top of the wave fifth right here, right, the wave 5, we can make the argument that this could have been a potential positive for the bulls, where this could have been, your A, B, your C right there, your D maybe developing, your E. But unfortunately, once we saw the break down from this triangle, that was pretty much decided that that's not going to be the case. And so what we really saw was the development of this head and shoulders pattern with the volume matching. And so break outside this trend line right here, and you've pretty much eliminated the local trend line momentum that we had going over the last several weeks. First touch was right there, April 26th. Second touch, we could say May 9th. And third touch right there around May 21st. Okay, so these three touches confirm a trend line. As I've stated before, you cannot just have a trend line based on two touches. Okay, so if this is touch 1, this is touch 2. I think a lot of people think that this is two separate touches. It's not. This is really the same movement right here. So this would be another touch. So this is touch 1, touch 2. Touch 3 confirmed this trend line, and touch 4 right there broke through it. Okay, so this is how you want to define trend lines when you're looking at trend line movements. Same thing up here, right? If you look, this is a top of touch 1. Touch 2 right there confirms it, right? Or rather, creates the line. Touch 3 confirms it as a definite trend line. All right, and then after that, this is definitely a trend line because again, we tried to touch it again and then got rejected on the way down. All right, so these two are definitely trend lines, and this creates a larger triangle that has now broken to the downside. If we're simply looking at the breakdown of the triangle to the downside as a target, all we do is you measure from top to bottom right there at the broadest side, and the point of breakdown was right around yesterday. So we give it a target of about $7,100 or so. Actually, technically, it should be less. Wait a second. Well, I guess it is. Yeah, I guess it's 7,059 or so. That should be the target of this triangle right here to the downside. Okay, so if you're simply just playing the breakdown of this pattern, that should be the area that you should be aiming for. All right, and that kind of makes sense. Technically, I wish it was somewhere up here because this is going to be your first step in terms of support, or rather larger support on the way down from here, which is this previous consolidation of what we had consolidation for 4 or 5 days right here before that big move up. So I figured there's going to be a lot of buyers here trying to defend their position. And so I would probably think that in some way we're going to bounce maybe in the $7,600, $7,800 area, maybe pick it back up here, 82, 8,300, and then get rejected. I don't know exactly how it's going to go, but when it comes to just looking at price action and where price is going to gravitate towards, if I were a betting man, I'd probably say definitely right here would be the first step that you'd want to look at taking profit for the short position. As you very well know, we've been short for, I think, several weeks now. This is available in the Bitcoin leverage short channel right here. As you can see, since May 13th, I think we've been short. I kept adding onto my position. I think 93.25 was my last add around May 15th. So I think that was, where is it? Like right around here. Okay, so I kept averaging into my short all the way up here. I think everyone was thinking that this is going to break out. But the one thing that I've been telling you guys, whether you watch my YouTube videos, the Advantage members, I've been harping on the fact that this does not, to me, look like a reaccumulation ready for a breakout. It looks like sellers are looking to sell into FOMO retail up here, okay? It always looks like, to an average person, reaccumulation before an up thrust, because they don't look at the minute signs and the subtle signs that are inside the volume and price action. The one thing that I was seeing inside this is there were major high volume price drops coming in right at the top, up here, up here, up here, and even up here, and even up here. So in this whole area, it looked like distribution in the most efficient manner, where retail would FOMO into the sells of bigger professionals or whales, and they think that, okay, I'm going to buy here. This is the last time I could buy under 10,000. I'm going to wait for that breakout. But really, what you were doing is you're buying into what the bigger players are selling in a larger range. Okay, in a larger range, things will always look like this is a consolidation, and we're going to push up from here. But you got to recognize the signs that are out there. You know, so the first sign was volumes, you know, coming out right at the top, even this big volume drop, even this volume, all this chunk of volume that you see at the tops right here, that was a big sign. Aside from that, what I was seeing in the OBV was something also startling, which was the OBV overall was slanting down. After this key high that we put in, we only made a slight higher high in OBV, yet the price went almost $700 higher up here. But even the RSI momentum right here was, you know, sloping down, or rather, you know, you had a bearish divergence right there, right? So all these cases were kind of developing, or rather, you know, building a case for the short or bearish bias for me, while everyone up here was thinking about going short or were longing. So in this particular case, you know, understanding what is going on in price action is something that we do very well in our community. You know, the other way to look at price action is you can simply utilize this pivots indicator right here. Okay, if you are not someone who can identify key SR levels like I do, or utilize, you know, the OBV and different indicators and different ways of looking at price action, you can simply utilize this pivots indicator. And what you could say is, okay, well, until over here, right, price was held up by the pivot right here, right? Finally, we broke down through it, used that 4-hour pivot. Again, we're on the 4-hour time frame. Use the 4-hour pivot as resistance right there twice. So basically like a double top. This was your area where you could have gotten into a short position. You had multiple opportunities to go short up here, almost, for a good day or so. And then price finally broke down from here down, broke down almost $400 or $500 right now, right? So in this particular case, identifying just a simple system like pivots was very useful, okay? So you got to figure out what system works for you. Another system that you can utilize is this VPVR, right? So if we go over here, turn this on, where's my VPVR right there? All right, so the one thing you can look at right now is this is a key high volume node, meaning that there was a lot of volume transacted in this area right here from bigger players. So when bigger players are trying to get in and out of the market, they have typically transacted a majority of their positions right in this particular area, where you see this big spike of this black bar. And then also this red bar right here, this red marker is the POC, which is the point of control, meaning above this, the bulls are in control. Below this, the bears are in control. That's a simple way of looking at it. So in this particular case, price is below it, price is below the high volume node, price is also broken down below the triangle. It's also creating the head and shoulders pattern. So there are many reasons for me to be bearish, in a sense, be short, right? And continue holding my short. So I would probably be cautious of, if you're in a long position right now, I would be careful. Again, not investment advice, but I don't think that the slide for the price is done just yet. I think at the very least, we'll head towards these lows, maybe at least 8,400. That breaks will probably head down way down here around, $7,600, $7,700. Okay. If we start looking at this from a daily time frame too, right? Let's see here. There was this trend line that we've been watching from February 2019. The higher low touch right here was December 2019. And you could see we actually pierced through that, broke down, touched that support, broke up again, and now we're breaking down past that same trend line again. Okay, so this trend line once broken, I'd probably say again, same thing, right? We're going to start moving down much faster, in my opinion. Okay, so this is where we are. All right, still on my bearish bias. I'm still not seeing the kind of bullish momentum that I want to see. The only thing that you can make a case for is the Seamy Gap, which is currently around 91.30. But here's the thing: I think people like to look at gaps, on a 1 hour, 4 hour, 15-minute basis. I typically like to look at 4 hour and daily basis. And to be honest, on a daily basis, it doesn't really seem like a gap to me. Maybe like a slight, movement down that the candle itself is not, I guess it is a gap technically, but it's not like a wide gap like this, right? So the definition for gaps that we have could vary from time to time in that, there's this kind of gap, then there's this kind of gap right here where the candle itself, yes, it opens lower, but it's still within the confines of the previous candle's, low right there, right? The same thing right here. The previous candle's low was well covered, in terms of this candle opening up here. I think the definition kind of varies when it comes to gaps, but, to be honest, I think the actual definition of a gap is, basically anything that is a spread between the previous closing and the following opening. So in this case, the real definition is the fact that, yes, there is a gap here. How much of a gap and how much it matters, it's hard to say, okay? So we'll see exactly, what happens with this gap if it gets closed up today, tomorrow, in the next week or so. But so far, I think that the momentum is on the bearish side. So do be careful in thinking that the gap has to close and you have to go long, all right? Now, finally, we get to the discussion of the Bitcoin production cost. So make sure you guys go check out this, this indicator. I guess it was written by Charles Edwards. I thought it was written by Eric Capriel, but I guess that's someone else. So anyway, so Charles Edwards wrote this fantastic article. And you know, the key takeaways from this is Bitcoin's electricity consumption can be used to estimate Bitcoin's production costs. So the indicator is that, let me see here, let me find it real quick. Actually, I think it's over here. So here's the Bitcoin production cost indicator. All right, so that's kind of what it looks like, okay? So the big cloud that you see right now, that is on the top. And what this defines is that the average production cost for miners is somewhere up here. So technically they are at a loss right now, all right? And the one thing that we know about miners is that they just had a big supply cut, you know? So May 11th or whenever the halving was, their actual rewards got cut from 12.5 to 6.25. So that means that they have to manage their expenses of electricity costs, of hardware costs, and these are the costs that are all listed right here, you know. Let me see here. So hardware, capital expenditure, rent, wages, bandwidth, insurance, cost of capital, you know, all electricity, of course. These are all factored into the price, the production costs, which are right here. And so I think the average cost right now is around 15,780, which is the top right here, okay? So the one thing that, you know, even Satoshi, when creating Bitcoin, he wrote that price of any commodity tends to gravitate towards the production cost. If the price is below the cost, then production slows down. And I think this is the key point right here, which is really important, is that if the price is below the cost, then production slows down, meaning it makes sense, right? Price below the production costs means that miners are not profitable. Now, miners could obviously operate at a loss for, you know, a little bit longer if they see price potentially moving back up. But as they see price potentially breaking down further and further, they'll be more inclined to sell and maybe even close down the shop in terms of their mining, for their Bitcoin mining. And so that means that you have, again, as Satoshi mentioned, a slowdown in production. And on top of that, you have less miners in the system, but also those same miners are probably selling because they want to recover some of their expenditure. If price of Bitcoin keeps going down and the cost of, you know, they still have the cost of rent, electricity, insurance, sometimes they have contracts, you know, with the renters because some people may have bigger factories, they may have homes or, you know, solar panels or anything that they may be paying for to keep their mining equipment running. So when they keep selling Bitcoin, remember, Bitcoin miners are the people who have some of the most significant supply in the market. So when the miners sell, it actually has a significant fallout in price, okay? So this article pretty much dictates how the electrical costs, or rather the production costs overall for Bitcoin could be estimated, you know, that we could create a floor for price. Now, the caveat to that is, well, what about, you know, a potential ceiling for price in a sense that, well, if we're not able to get past a particular level, majority of miners are right now operating at a loss because remember, the average production costs are up here. Miners will keep selling, right? Production will go down. At some point, the hash rate will also slow down. But here's the thing about the hash rate, right? Even over here, here's the hash rate, right? Coming into that same capitulation cycle that we saw over here, right? So it seems like the hash rate itself, it might be dictating that capitulation for miners might be coming soon again. And on top of that, we understand from the Bitcoin production costs, again, you can go read this article yourself, right? It doesn't necessarily say that price has to go down from here. What it's really saying is if you look at the costs of producing Bitcoin, here are the costs associated with it. It makes logical sense that if miners are operating at a loss, they will operate at a loss for only, you know, a certain amount of time, and then after that they'll sell their Bitcoin, right? To be able to cover their expenses. If they sell their Bitcoin because they have a lot of supply, they'll actually drag down the price. Okay, and if there's not enough buyers to actually hold up the price, we'll have another faster acceleration down, which again creates a cascading effect, which is that miners sell. There's not a whole lot of buyers because the miners are selling heavily, and so the price goes down faster and faster. Because remember that the halving event already right here has been priced in, no doubt, okay? Now, if the price starts going down, it doesn't really have a reason to keep going up, right? The supply's already been cut in half. I get that. The miners themselves are struggling right now. I think global equity markets are still, sort of toying around with, recessions and depressions. So this is why I'm still of the belief that Bitcoin, in my opinion, has a long way to go when it comes to a price that will come up to levels that are, potential breakout levels in terms of a bullish trend. On the daily chart, I see a very stark resemblance between what happened in this early 2020 cycle right here and then what happened now, which is this trend line right here. If you simply look at this trend line, okay, you can see once we started seeing the breakdown from this trend line, we saw these key lower highs being created inside this lower high trend line. And the same thing right here, right? Price moving up alongside this trend line, okay? Then we started breaking down from here, and then it looks like we're starting to roll over, kind of like over here. Again, we could have maybe one more push up here and then start rolling down, but we'll see exactly, what happens to price action. But for the most part, right, if we start looking at this from this kind of perspective, okay, actually, let's do 5-day, this kind of perspective, and we can see clearly that if we hit 10,500 up here, okay, in October 2019, and then February 2020, we hit 10,550, and now we kind of created a pretty steep lower high as per this high right here, and we're starting to move down. If we keep moving down from here, that will effectively mean that more likely than not, we might have to put in a lower low from here. Now, you're probably wondering, well, why the heck does that even have to happen? Well, if you approach this 10,000 level 3 times, and on the second attempt, you went all the way down to $3,600, and you couldn't even break $10,000 for even more than a day, well, what does that mean? That means there's just not enough demand over here, or not enough liquidity taken from the downside for us to warrant a break above 10,000 or 10,500. So that's why I would look for a lower low down here, maybe around $2,400 or so, because that is a S1 level on the weekly. Let me see here. Let's turn on the pivots. So here's the S1 on the weekly, right? $2,400 or so right there, okay? So if we start breaking down past this pivot, again, that pivot, we have a long way to go, right? That's around $8,100. If we break down past this pivot, I would say there's a high chance that we go towards S1. But there's still levels to break in between, But on a weekly basis, there's not a whole lot of consolidation that we had on the way back up. Once we break that S1, or I'm sorry, that pivot right there, chances are we might gravitate towards the S1 level, okay? So, again, there's a lot of different ways to look at the market, and I'm not saying that, if we're bearish, we have to go down to 2,000 or whatever, but I don't see any other way where if we attempted to break through 10,000 3 times, and the second attempt right here, right, when we went down here, third attempt we pushed back to 10,000, we couldn't even have a day above 10,000. Okay, we wicked above to 10,085 and then quickly got rejected. We didn't see 10,000 again. So fact of the matter is, that means we might actually have to go down further to take more liquidity down here, garner more interest from people, and then maybe someday later in 2020, 2021, we might actually break 10,000 then, all right? So this is kind of my analysis of why I'm looking at the broader picture of the market as still bearish. And I think, while everyone is bullish, maybe they're just bullish because they can't see it any other way, that the market may have to take one more leg down. And I think the fact that a lot of people are bullish up here makes me a little bit happier that I am bearish, because I don't really want to be on the side of people who are bullish still after such a huge 8-week straight up parabolic move, and almost like a 200% move. And then now once price starts going down, they're going to keep buying and buying because they think that price is going to go back up. This is the best way to sort of cause a lot of pain to the downside, where you think everything looks bullish and you think that every pullback is a buying opportunity, but in fact price might actually keep sliding down. Let me see here. So that's kind of where I am right now with the price of Bitcoin. You could go look up and read this Bitcoin production costs article on Medium. It's really a fantastic article, and I thoroughly enjoyed reading it. I think it really does in many ways show what exactly is happening behind the scenes in terms of miners. And then also I showed you guys the miner capitulation that's coming up right here. I also showed you guys how the CME futures are showing higher open interest while price is actually rolling over to the downside. So higher open interest, price going down is actually bearish because there's more shorts coming into the system. Non-reportables, which is your average retailers, maybe some professionals in here, are actually more net long, versus your non-commercials, which are your hedge funds and institutions, are actually more net short. So I would rather be on the side of the big money, which is the bigger hedge funds and whales down here, rather than the individual minnows and fish, which are thinking they're more net long. All right, so that's pretty much the analysis for the day. I hope you guys enjoyed it. Come join the Advantage membership, or come join our free Discord. The link is below. Give me a thumbs up if you enjoy my content. Hit subscribe. Until then, I'll catch up with y'all soon. All right, cheers.